Where we are now is the liquidity cycle has now met the bottom of the exponential trend, the adoption trend, and that becomes an extremely interesting time to focus on accumulating crypto. What also happens at the bottom of liquidity cycles is things blow up. Less money around means those worst borrowers and people who have abused capital tend to blow up. And we saw that starting in June in the crypto markets as the centralized finance part, the CeFi part of crypto, blew up.
Raoul Pal, former co-manager of the GLG Global Macro Hedge Fund in London. He is considered as one of a relatively small number of investors to predict the mortgage crisis of 2008 to 2009. Pal leads Real Vision to provide unparalleled access to the very best insights and analysis from the brightest financial minds. Real Vision CEO Raoul Pal is unveiling his price targets for Bitcoin and Ether this year while naming one nascent crypto sector that he believes will do well in the coming months. In a new Real Vision Finance interview, Pal says favorable macroeconomic conditions toward the end of the year could push Bitcoin and Ether. He said in his recent interview that cryptocurrency industry holds around 18% of its assets in cash, provided that stablecoins are taken as a valid surrogate for cash on the sidelines. Bitcoin burst the $18,000 level on Wednesday and reached $19,000 by Thursday late evening, while Ether, on the other hand, reached the $1,400 level. According to Raoul Pal, the overall crypto market is in green with every major coin trading up.
And therefore, inflation is going to start coming off. We saw that with PPI today as well. And I think we'll start to see unemployment pick up, whether it's this month or next month. Those are the signals the Fed is looking for to slow down. So when they slow down, it's the rate of change of interest rates that matter, whether they do another 50 and another 25 or another 50. Either way, we're getting towards the end of the rate cycle where they will pause. The pause is enough for the market to perceive it as the lack of pressure holding this balloon underwater. And when you take it off, the balloon can rise. And we've already seen the equity market take that well. I don't believe that means if the equity market's going up, inflation's coming back all over again, we're in a big mess. I just think the Fed just stay on pause and wait for inflation to fall below the Fed funds rate. My guess is inflation will be below 4% sometime around February, March of next year. And in which case, if it continues to fall, which is my base case, in fact, I think inflation goes negative, then we will see the Fed eventually pivoting and going to rate cuts instead to stimulate. But that game is to be played for. Right now, it's a matter of the end of the macro story and liquidity coming. The global liquidity cycle is currently led by China. Chinese liquidity has turned up, and I put a tweet around this amongst all of my macro crypto views. Chinese liquidity leads, global M2 should follow, and as we start getting through the liquidity cycle, liquidity is one of the key drivers of crypto.
The macro guru Raoul Pal in a tweet on Thursday said that the crypto market is essentially short the upside call, which means the market participants are not betting on an increase in price. The year 2022 turned out to be a game changer for the digital asset market. After the market of last year experienced exponential growth, the year's peculiar event brought attention to the industry's flaws. The initial Terra Luna collapse's blow was immense, while the downfalls and bankruptcies that followed it were catastrophic, and the fallout from the FTX Alameda collapse was almost unforeseen. It wasn't just a downfall, but an enormous breach of ecosystem-wide trust. They demonstrated the value proposition that digital assets offer market participants compared to traditional finance.
Naked. What we didn't realize is there was a naked whale, and the naked whale was FTX and Alameda. And that was something where it appears from what we know that Alameda went bust in June. And out of that, they tried to paper over the cracks with customer money to hide the issues because it would have brought down the exchange anyway because of the tie-ups with the FTT token. And then this whole thing gets exposed by CZ, but really the market needed to know this stuff. So that's where we are now. I am very focused on crypto right now, as I am the macro cycle, because they've met at the important part, which is the bottom of the liquidity cycle and right on that secular uptrend of whether it's there are 2 standard deviations that oversold in the log regression channel of Bitcoin, or whatever thing you want to use to show that we're there now. Now, that doesn't mean I'm saying the price needs to have entirely bottomed. I think actually ETH bottomed in June, but I don't know yet. Could it have a further spike back down to 1,000? I don't think it takes out the 700 and whatever low that we had, but let's wait and see.
Given the magnitude of the crypto sell-off, Bitcoin's 38% market dominance is low compared to previous cycles. Assets other than Bitcoin have proven resilient in this crypto winter cycle. The failures of Terraform Labs and FTX sent the cryptocurrency market into a tailspin, with fraudulent activity and asset losses destroying investor confidence and attracting regulatory and legislative scrutiny. There were some sizable losses in the cryptocurrency market, including Cardano fell by 81% and Solana by 94%, both of which caused them to drop out of the top 10 cryptocurrency rankings. Web3 issues and a decline in NFT trading volumes exacerbated the bearish sentiment.
I bought call options thinking that the chart pattern of Ethereum following the Bitcoin pattern from the previous cycle might play out. Those call options were 5% of my risk. That bet was wrong. I've made millions of wrong bets in my life, and I will continue to make millions of wrong bets. Over time, I've been a lot more right than I'm wrong. And I got that one wrong. And I explained when I did it that it was in options and I had defined risk. So 20,000 ETH didn't work out. Can it get to 20,000 in the future? Yeah, I'm pretty sure of it. Every time you go closer to what the traditional financial market looks like, you are adding on risk. Custodying Bitcoin, Ethereum in your own ledger device or Trezor device is as low risk as you're going to get. Now, obviously, there's all the password elements and remembering your seed phrase, all of that, but it's then down to you. You are responsible for your own money. I like a world where we're responsible for our own money. Like I'm responsible for my own car and my own house. Somebody else isn't responsible. Why should I do that with my crypto or my money? And so I think it's a really important thing. Now, of course, we all need to use exchanges. So what do we do? You do your trading on exchange, you buy and sell what you want, you take it off the exchange. That's it. And you can do the same with your NFTs. I'm a huge Ledger fan. Just store them there. If it's shrapnel and shit you don't care about and you want to trade out of it, sure, leave it in your MetaMask, leave it in wherever you want, but don't leave big balances. You don't need the risk. Crypto gives you the answer of not needing to take risk. So I love that.
After several landmine events in crypto market in 2022, 2023 has a few bullets to dodge. While bearish in the... What are your thoughts about Raoul Pal's latest crypto market prediction? Let us know in the comment section below. If you find our content interesting, give this video a big thumbs up and do subscribe to our channel.